Hi everyone, I'm Gemma from Mantle. I'm working as a Korean lead at Mantle. I'm very excited to be here to talk about better banking experience today. I'm so ready to learn from all these amazing leaders to bring us better on-chain banking experience. So before jumping into the discussion, can you give us a short intro of yourself to everyone here? I'd like to hear what brought you here today. I mean, not just today's forum, but you guys are innovating the banking experience, even on-chain. Can you share what banking experience you are trying to bring to us on-chain?
Hi guys, this is Michelle. I'm from Pharos Network. I'm the CMO at the company. Pharos Network is building RWA layer 1 that is scalable at internet scale, we call it, but open finance for the users. We are very closely working with Ant Digital Technologies who are heavily moving into Hong Kong stablecoin sector as well too. That's why I'm here, and I think in general, the Asia is the very fast mover for the Web3 has been, and that's why we are targeting Asian market heavily. As I am Korean too, we are quite a bit slower than other rest of the Asian market, but very excited to have this opportunity. Pharos is the biggest actually sponsor for this event because understanding needs of meeting the institutions and banking and also the same builders that working toward to the similar things is important. So that's why I'm here. Thanks for inviting, guys.
Hi everyone, I'm Neil. I'm the CEO at UR Bank. UR is a Swiss licensed institution. We issue bank accounts to KYC users. We bank users globally. And what's interesting is we allow users to link their crypto wallets to their bank account. What this means, it's seamless for users to on and off ramps directly from wallets into named multi-currency bank accounts. We're licensed by FINMA, the Swiss regulator. We also are a principal issuer of MasterCard, so we issue a card that allows users to do their everyday spend. And yeah, while I'm here, I spent a decade before this at companies like Grab, Tencent, Alibaba, building digital wallets, digital banks for communities and markets in Southeast Asia, trying to bring, kind of like cash-based societies into digital money from Web 1 to Web 2 money. And so it's kind of like my passion, and now I'm very excited to be here to, orchestrate the next move from Web 2 to Web 3 money.
Hey everyone, my name is Sam. I'm the founder of Frax. Frax is a USD stablecoin issuer and DeFi platform. And most recently, we're building a full on-chain banking platform called FraxNet. So this is a very aptly named panel because what our premier application allows people to do is use the Frax USD stablecoin in digital cards, have virtual bank accounts, move it between the 20 plus chains that it's issued on, and earn yield in a safe and regulated manner. And in fact, that's pretty much, in our opinion, what on-chain banking means, right? So Frax originally issued Frax USD on these chains, integrated in DeFi, but then it's not just DeFi, right? You have to now connect it to the real world, to people's bank accounts, to cards, to payment systems, to all of these things. And so that is what the next step of bringing USD stablecoins to the masses is, and then connecting that to different geographic regions with other stablecoins potentially.
Fine. Yeah, so those are all industry-leading innovations we can find about especially on-chain banking. So our session is about how we can build better banking experience on-chain. And when I hear about banking from various teams, and I feel like the definition of banking can be very, very depending on what you're looking for and what you're working for. So I was curious what banking should be like. So So I asked my best friend, obviously my ChatGPT. So this is the answer from my best friend. Banking is essential for managing and safeguarding money. Banks offer many financial services that help people save, manage, and invest their money. These services benefit both individuals and businesses. So I feel like banking in traditional way is bank's job, but I feel like it's different on chain because we don't want middlemen there. So can you define what on-chain banking to you guys, and what's the better or special about on-chain banking compared to traditional banking, which makes us in the future choose on-chain banking over the current system?
Sure, I think I can explain it first that for me, on-chain banking is different to traditional banking. Obviously, that every data are transparent. So first of all, that you can actually build an open finance. You mentioned the middleman. So similar to that, there is no middle gates or gateway that you can access to the funds or any other finance products. And everyone will be able to track where the funds coming from, where is it distributed, and also where you can own and also derivatives through different products. So that's very important thing. And second part is you can actually get global exposure. Because currently, if I want to buy, for example, Indian stock, it would be very troublesome for myself to get access to different global products, but also an institution wants to get into different global audiences. So it will be very faster. And second will be faster and composable. Currently, you can send a, like for example, like a settlement to a different country will take probably a few days. I actually been quite annoyed that some vendors that we are working, they only accept bank transfer, and it takes at least a few days, or it sometimes get rejected too, because it's various different reasons too. So it takes quite long while blockchain itself is very fast. The other part is composable part. Right now, you can either only buy some ETFs or some finance product that is very related to one product or some very like general ideas. But for example, right now you can combine Tesla and maybe Dogecoin together and earn different products too. So that will be very exciting. But beside that, I think the most appealing for users are high yield. I don't want to stake in my bank that earning 2% in Korea. Right now, I can earn 12% easily on chain. So that's are the most important thing and different to traditional finance and banking.
I can share a bit from UR's perspective. So I like to use the analogy where previously there was this wave of fintech companies in Asia, in Southeast Asia, like Paytm, Grab, which I was a part of, trying to bank a lot of these underbanked users. They were primarily paying with cash, and what they were doing is they were stashing cash under the bed, under the pillow in the closet somewhere. And when they wanted to save, that was how they did it. There was no yield, no interest. If they wanted to, they would have to go to the market, and they have this little club where they would lend money to each other, and they would charge each other interest. And they do collections because they know where you live. And so when players like Grab and Alipay, they went in, what they did was they moved all these users into digital wallets, into digital money. And what happened was it unlocked for a lot of these users access to financial services. Right now, they can send money instantly. I don't have to run over and hand you cash. I can pay you at the store because you don't trust my money. You don't have to count change. You don't have to give it to me anymore. And the cost of storing that money is no longer relevant because it's all digital. And the best thing is now, because your money is digital, you can save it. You can put it in simple savings account because it's digital. You can send it to a bank. And so for us at UR, we have the same idea, which is this is what we want to do for Web3, which is what all these fintechs have done to move in Asia, all these cash-based societies onto digital money. We want to do the same for now. Everyone in Web2 with Web2 money, how can we help them easily access Web3? in a familiar way, right? And gain access to all the services that, Michelle just talked about, like 12% yield. Why is my dad still putting it in a fixed deposit account earning 2% and illiquid 3 months lockup when you could have something accruing daily and monthly payouts, right, on chain? So that's what we're doing. But to the bank ourselves, what on-chain means to us is a lot of our tech and operations is now much easier. It means core banking is no longer a 6-month integration with 7-figure, let's say, core banking software. Everything's on chain. It also allows us to connect to partners, hopefully, soon to like Frax and our partner now, Athena, very easily through APIs. Everything is just dev work and it's done. So enabling financial partners is becoming more easy. And so that's what we do. So what matters to customers is the upside in terms of financial products, in terms of ease. And for the bank, it's how we can build better products and operations faster and more efficient.
Yeah, so I think with on-chain banking, there's a lot of advantages, but also there's a lot of things in traditional banking that are taken for granted that now need to be brought on-chain. For example, when you wire money to another bank's account, right, like it is one-to-one, right? It is not another bank says, oh, this bank is risky, so we'll take it at 99 cents on the dollar. Those composability between dollars or Korean wons or wherever the bank in that region is located is required on chain, right, as like a base feature. So one of the things that we're trying to do with Frax is that with FraxNet, it is kind of this account layer that you don't ever need a traditional banking account anymore. And so if you have all major stablecoins like USDT, like the panel before us was talking about, or you have Frax USD, or you have PYUSD or USDC, those can be one-to-one, moved and minted and redeemed between any other stablecoin that's supported, and then they can be moved one-to-one between any chain that we actually support. So we support over 20 plus, powered by Layer 0 as well. And so the important thing is as we add more and more banking infrastructure partners, so perhaps we already work with Liat Beng in the US, and we work with Bridge and Stripe for this orchestration feature, we'll be able to actually make an account layer that actually makes the on-chain banking completely the future without anyone ever needing to touch the traditional banking system, because all of the features that you need, that people actually need for commerce, one-to-oneness, immediate settlement and payment, and also spending at point of sales, like Visa cards, MasterCards, virtual accounts that you can swipe at point of sales, they'll all be located in one single place with the stablecoin that you need to use and connect it to one of the many chains that Frax's infrastructure supports. And so basically on-chain banking needs to have the best of both worlds. And right now there's a lot of people building that, and our feature is to combine all of those features in one account.
Oh yeah, so I finally can understand on-chain banking gave us like better interoperabilities, accessibilities, and speed of liquidity. So I guess like since we are Asian Stablecoin Forum, can you connect us this on-chain banking and Asian stablecoin needs? So when you see the stablecoin era, USD stablecoin demand is massive, even in Asia. But do we need it like Asian stablecoin for better on-chain banking? What do you think we need like as Asian stablecoin should be like to accelerate the better on-chain banking experience?
Sure, I'll start again. I think it's not like it is true that there is a high demand in US dollar because of not only there's so much more available in the market, but also there is like many other factors currently happening. There's the war and also tariff and some sort of political matters actually increase the needs of US dollar and stability, and they're also increasing in terms of the foreign exchange rate as well too. I don't think there is no demands for the localized stablecoin. Obviously, every countries that we know of in Asia are working on the stablecoin regulations. Just the regulation and compliance not here yet, but I know that many companies in Korea, for example, are working toward to the stablecoin. I saw news today that Naver, the biggest fintech tech company in Korea, is acquiring Dunamu, which is the behind Upbeat, and they're going to build the best combining crypto exchanges and also wallet and fintech project in Korea. So, for example, like that, there is a high demand for the users. We are here all crypto bros, crypto girls here, that we are heavily involved in the US dollar market, but I'm sure the normal people in Korea, for my mom or my family member, loves to and willing to on high yield and composable different finance product if there is a stable coin in Korea available for the normal users. But we're not there yet. I think all the regulation and compliance going to meet and fast adopting the needs of Asian stablecoin.
Okay. I should say maybe something controversial, which is actually there's already an Asian stablecoin, which is how it's a synthetic stablecoin, which is people hold USD, and then there are all these routes that you can actually cash out into your local bank accounts. So I think this exists in some form today in a lot of Asian markets, right? Asian users want whole USDC or T or whatever, a representation of the US dollar. And then they all have their own ways to cash out or through a card provider pay to access the value. So actually this is happening that a lot of people are realizing, users unknowingly, the value of what stablecoins can do for them. And so for UR, where I believe is actually the most important thing to be built aren't like specifically stable coins, the tech and the work that goes into it, but it's actually the last mile connectivity. So the value of stable coins can only be truly realized for the masses if the value of this can be sort of realized in society which they are in. And in a lot of Asian societies, this is sometimes into their bank accounts, into cash sometimes, right? And so I think the focus has to be for a lot of regulators or stablecoin providers is to build that last mile connectivity, figuring out cash outs, off ramps, banking partners, liquidity, connectivity into local payment rails, allowing stablecoins to be accepted and settled across local rails. And then I think if someone or a few parties do issue local Asian stablecoins, then immediately there is going to be utility, right? If not, it's just going to be, kind of like the white elephant, right, in the room.
Yeah, so I think the most important thing is that last route that you said of going between USD into local currency. And so at Frax, we're actually working with the IQ team to issue a KRWT, Korean won token stablecoin, specifically because we think Korea is one of the most important, if not the most important in all of Asia in terms of the size, the vibrancy of the crypto ecosystem. And so the important part about it is that I think that just like how Tether is so incredibly big, and it was not started by a banking conglomerate or by getting licenses, but it was actually meant to solve this exact arbitrage final mile problem. Like Tether was actually originally created a long time ago because centralized exchanges needed a dollar pair to actually arbitrage between Bitcoin pairs between each other. On one exchange it was like $1,000, on another exchange it was $800, and you couldn't actually do this arbitrage because you had to wire out. That took a day. You had to get the wire and then wire into the other exchange, and that took another day, and then that was 2 days. But Bitcoin traded 365, 24/7 on all of these exchanges, right? And so there needs to be, for sure, without a doubt, a digital representation of all local currencies, especially the Korean won. And so we are working with a crypto native team, the IQ team, to do this with the KRWT token, is what they call it. I think there will be a Japanese yen token, there will be other Asian tokens, and that's going to be really, really exciting to see that in the future because there needs to be that digital representation without a doubt.
Mm-hmm. Right. There are actually so many questions I'd like to ask you, but because of time restriction, I feel like we have to wrap things up right now. So thank you so much for sharing your insights with us today. And I've been looking forward to having like better on-chain banking experience on all of your products very soon. And thank you everyone for joining us today to listen to these insights and the new innovations they're going to bring to us. And if you have any questions after this session, feel free to approach us, get to know more about their innovations and banking experience. Thank you.
Thank you.
Thank you.
Thanks.